Good afternoon, ladies and gentlemen. It's Paul here. Here we are on Monday, the 11th of February 2019. Here we are for session 26 in the Admiral Markets webinar series of Mastering the Four M's of Trading. My name is Paul Wallace. I'm a trader, analyst, and coach. I'm your guide through this series. And as always, before we begin with the main content, we'll just begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. There are many fine reasons to choose Admiral Markets as your main broker. If you look there for two of the most popular offerings in DAX 30 and Eurodollar, you'll see they have very tight competitive spreads during open market hours, and they also offer the MT4 and MT5 platform with the Admiral Markets MetaTrader Supreme Edition. If you have any questions, please ask your account representative. And be aware that Admiral Markets is a global broker that is registered, authorized, and regulated across various regimes across the globe. So once again, please speak to your account representative, and they'll be able to ensure that you trade using the most useful and most ideal regulated authority. As always, expectations for our session, ladies and gentlemen, are that for me to educate you about the four M's of trading, so you can go away and begin to analyze any market, be ready to trade it, and then hopefully you raise your self-awareness about managing risk and managing yourselves. For yourselves, ladies and gentlemen, as always, there's a broad range of experience in the room, I understand. We are under time limitations, which means that we can't always go into details with as much depth as people would like, but we also try to focus on elements that you can use tomorrow in your own trading that will help you evolve and develop as a trader. So, as always, ladies and gentlemen, mastering the four M's of trading is about understanding, managing, and mastering those four M's: markets, method, money, and myself. If you want to have a bit more in-depth understanding of those four M's, then if you can find session 1, which will be on the Admiral Markets YouTube page and also on the Facebook page, you'll be able to find all of the previous sessions in those webinar archives. If you look at session 1, you'll see where we go into those particular four M's in detail. For the first part of our series, we focused a great deal on markets and method. For the last month or so, we've focused primarily on money. And actually now what we're starting to do is we're starting to nudge our way towards what we have to do to help manage ourselves. Because what happens is, when a good trader is managing all four of those M's very well, that's when they tend to be delivering the kind of trading performance that we all like to see. So you remember, ladies and gentlemen, I talked quite often, pretty much every week, about the importance of having just simple processes that you can follow as a trader every time you're looking to engage with the market. And we talked about, following these just simple processes is what actually will enable you to develop good habits, and that's actually what we need to do as traders. So we've talked about, to begin with under the mastering the four M's of trading, we'd talk about having sort of 10 steps that we could follow as a trader. We've covered the majority of the first 5. Okay, it literally said whenever you look at a chart, step 1 is you want to define the levels of support and resistance within that chart. Step 2, define if there's a trend. Step 3, wait to see how price reacts at those key support and resistance levels. Look for particular price action signals at those levels. And also step 5, take a look and see if they're part of a bigger chart pattern. As I just said there with previous sessions, the previous sessions where we dealt with those particular steps in detail, they are all available on the Admiral Markets YouTube channel. So by all means, go and take a look at them, and you'll be able to sort of find plenty of in-depth detail analysis there that will help you understand those 5 steps better and better. What we've done for the probably the last sort of 6 weeks or so is, we looked at particular step 6 and step 7. Step 6 is risk. Define your risk, accept it, and stick to it. And step 7, reward. Okay, are you going to be using a target, or are you going to be using a trailing profit stop? Whatever you choose, know your exit before you actually enter the trade. And today we're going to start to nudge our way on towards step 8. If you remember last week, we just finished sort of looking at risk and reward with a bit of a focus on, just what it means, what it requires, what it's all about. We talked about how, sometimes you'll hear traders talk about it as the 3 R's, the risk to reward ratio. But what we wanted to understand is that, with in trading, there can be no reward without risk, and it's about being able to, to manage risk and understand that you're able to, take trades that demonstrate a good reward for that risk. Talked about how it is a balancing act, right, and about how it's defined by your own risk profile. And what we mean by that is that here at Admiral Markets we have a wide range of educational contributors who can teach you all sorts of things about trading. Okay, pretty much everything across the spectrum. But the one thing that has to come from yourself is about understanding your own risk profile. That's the key thing. Some traders are aggressive, some traders are cautious. If you want to look more into that, remember we did a session a while back there on greed-based traders versus fear-based traders, and I would heartily recommend all new traders go back and find that session and actually have a look through it, because I think you'll find some interesting insights there and help you understand what type of trader you are. Understanding what type of trader you are, I assure you, will help you make swifter progress towards your trading goals than anything else. What we also talked about is, how I actually look for when it comes to my trades, that I'm looking, and I believe in what I call asymmetric reward to risk trades. And what does that actually mean? That means that, if I'm going to be risking 100 euros on a trade, I'm looking to make 200, 300, 400, 500 euros, okay, in return. I want my reward to heavily outweigh the risk I'm taking. And the reason I talked about that is that because it removes the need for me to be right on trades, which I think takes the pressure off my shoulders. Whereas actually what you'll find is most new traders, okay, they will risk a great deal for very little reward, because the chances are that they will be right quite often, more often than not, and they have a need to be right more than a need to be profitable. Whereas I'm the opposite, okay, and you'll find lots of professional traders are exactly the opposite, all right. We actually prefer to work in asymmetric reward to risk trades. So we talked through this, last week at some length. Okay, realistically, what we're looking for here there is that if you have, you can probably see that yourself there, that if you have a reward to risk ratio of 3 or 4 or 5 to 1. Well, actually, once you're anywhere, above 30 to 40% profitable, well, then you have the opportunity to sort of be a profitable trader. Okay, if you have a 30 to 40% hit rate and above. Now, of course, most people would like to actually have a 60, 70, 80, 90% hit rate. Wouldn't we all? Wouldn't we all? Okay. But the reality is that, that's not always the case with the best will in the world. Okay. You're going to, your trade ideas won't work out. They'll fail. And it's about, as I said, having that asymmetric reward to risk ratio that effectively, prevents you from having to be right on every trade, because that never really is a good place to be. So, that sort of stuff I wanted to just recap. Those of you just joining for the first sessions, I'll also do a quick little recap of the last couple of sessions, because I think that the more you hear this from me, the more it kind of sinks into your trading psyche, the more it becomes your trading habits. That's what I want. I want you to have good trading habits when you sit down to engage with markets. So, as I sort of mentioned there a little before, sometimes asymmetric reward to risk trades, they're not always easy for new trades to follow because actually they would sooner be right than profitable, which might sound a bit weird, it might sound a bit strange, but actually you will find that people would sooner be right than make money. And if you have the ability to do the opposite of most people, well, then you put yourself in with an opportunity to trade very, very well, in terms of your the profitability of your trading business. So, that was, with a little bit of a recap, as I said, we've been up to step 7, and now, that feeds into step 8, which is record. Okay, that's what we're going to focus on for the majority of today's session, and it follows on naturally from risk and reward. Okay, and it helps us with some of the things we'll talk about. Is actually sort of starts us move us more and more focus onto the sort of in terms of that 4th M of trading, namely mastering myself. So here's a question for you, ladies and gentlemen, you're watching this, whether you're here with me today or you're watching this on demand in the future. Is it possible that your trading results for that particular session could be determined before you even switch on your computer? Just take a moment to reflect upon that. I know that some traders would watch that and say, well, of course, no, not at all. Others may say yes, but they might not understand why. Others might have a reason why. They might understand why that actually could happen. And we're going to sort of discuss that as part of the, let's say, the overarching aim for our session today. Is it possible that your trading results for the session could be determined before you even switch on your computer? I firmly believe they can be, and we're going to start to touch upon that over the next couple of sessions to understand why that is and what it is that we can do to actually help ourselves. So what I find is that new traders find it difficult to recognize the importance of a trader's mindset, of managing myself. Most new traders will focus on the method of trading, how to buy and sell. That's what they're interested in, I run trading events all over Europe. Whenever I meet new traders, they all want to talk about the method of trading. Where do I buy? Where do I sell? That's what they want to do. But what you find is experienced traders, professional traders, they have their focus elsewhere. And that's what we're going to take a little look at now. So let's take a little moment to think, where does an amateur trader's focus go? So if we were thinking of, let's say, a pie chart, in terms of, under those those 4 M's, all right, the sort of markets, method, money, and myself, where would we find that most of the amateur traders' focus goes? Some of you may have an idea. Some of you may not have thought about it before. But we're going to take a little bit of a look at it now. So here's go the trader's focus. Where do we think that the trader's focus goes in terms of method, markets, money, and myself? And actually, what we see is that probably around about 60% of an amateur trader, a new trader's focus goes on the method. Okay, they want to know where to buy, they want to know where to sell. They love talking about the actual activity of trading itself. Then you might have about maybe 30% would go on markets. They want to know what they want to know what the Dow is doing. They want to have an indication of what the DAX is doing. They might have maybe only 3 to 4%, are focused on money, and a couple of percent on managing themselves. That might say to some of you, that might sound, well, yeah, you might understand that. That might resonate with your own experience. Other traders might look at that and say, surely not. Surely not. That's not the way we work. But actually, you will see time and time again when you sort of talk to amateur traders, that's where their focus will go. So having had a look at that, let's have a look at where we think, sort of a professional trader's focus may go. You might have an idea, how differently that might is. It might be completely different. It might be just, very similar. But let's take a little look. To interpret, once again, those 4 M's: method, markets, money, and myself. What we have is actually, professional traders. They're only probably about 5% of their focus is on method. Why is that? It's because mostly they've just got some simple setups that they know very well, and that they employ. Excuse me, and that they employ as part of their trading across the board. So actually, as I said, they're not always just trying to curve fit their ideas or just constantly sort of switch from one sort of trading idea to another. It's effectively just a case of they have a couple of simple setups that's for their method, and they just follow that time after time. Then they might have a little bit, about 15% of the idea in markets. They just want to understand, which of the markets, they're trading are active, and be able to, understand which of the ones they should be engaged in. What we start to see is that, in terms of, those first three, well, actually money management starts to become much, much more important. Risk management is key. That's hugely important for traders. And that last part, almost like 2/3 of it, is about managing themselves. Now, some of you who might be new traders watching this, okay, they're new to trading, might be saying, well, what does that actually mean, Paul? What does actually managing myself as a trader actually mean, and why is it so important to professional traders? And that's what we're going to touch on, time and time again for the next few sessions. We'll get that opportunity to really delve into that and discuss how that has an impact. And with that in mind, well, then you'll soon hopefully be able to sort of see how that has an impact upon traders, and be able to see what you can do, okay, to start to change your own approach and change where your focus goes presently. So here's a great quote by a chap called Tom Basso. He's featured a trader in a book called Market Wizards, which most traders would have written very well. Most traders would have read, because it's very good. It's written well, okay, and it's about engaging stories with real market wizards. So Tom Basso says, I think investment psychology is by far the most important element, followed by risk control, with the least important consideration being the question of where you buy and sell. Okay, and that's very true. And that's, he's from a professional fund manager for probably 30, 40 years, and as he said, it's that psychology, okay? It's about managing myself is by far the most important element, followed by risk control. With the least important being, that question of, where you buy and sell. As I said, that's the difference, how professionals look at trading compared to how, new amateur traders would. Interestingly, here's a quote from it's one of my own personal professional heroes, Paul Tudor Jones. He talks about how profits come from happiness, not the other way around. So now I spend my day trying to make myself as happy and relaxed as I can be. And that's an interesting quote, okay? Just focus on that. Profits come from happiness, not the other way around. That's very true. It's about, once again, that's about how he manages himself, all right? How he manages himself before he actually even switches on his computers or starts to pull trades, okay? It's about him putting himself in a good mental space, good mental, emotional, physical space, I would say, that actually allows him to operate at his best ways as a trader. And that's what we're going to, as I said, we're going to be sort of focusing on over the next few sessions, just to make sure that we're able to sort of help educate you on what you can do to improve that in your own trading business. So what can we learn from all that? Well, simply focusing on your trading method is not enough. I know that as new traders, we all like to sort of look at new methods. We all look to look at new setups, but actually, just constantly changing it, trying to learn them is never really necessary. Trading is a performance activity. And what do I mean by that? Trading is not the same activity in terms of, working in the old days, working in a factory from 9 to 5, 40 hours a week, or working in an office. Trading is a performance activity, okay? It's actually, you get paid, all right, to perform well. And so with that in mind, you need to develop a performance mindset to enable you to operate effectively. This is all feeding into managing myself. And that mindset provides you with the mental toughness to be able to handle whatever happens in the market. So, mental toughness, you can you prefer to have that in there. Some people might call it mental toughness. Some people might call it, attitude or self-belief. Some people might actually determine it as resilience, etc. But what it is clear, is about, it's about having the right mindset, okay? About having the right mindset for when you engage with trading. So, what do we see? Okay, what do we see when I speak to new traders? As I said, I work with and manage new traders all over the world these days, and what we see from new traders is that new traders, they get caught up in the excitement of trading. Okay, markets are moving fast, and those traders want to jump on it because they are. To begin with, like greed-based traders, okay, and maybe they look at the markets like a big jackpot machine, all right, and all they see is possible profits, and they don't see the possible downside, all right. They are looking to chase profits because they're probably greed-based traders to begin with. But what we have to realize is that trading it's a bit of a journey for us all. Okay, all of us are on that journey with our own towards trading mastery. Okay, we're all at different stages there, but we all have to start somewhere. And like any journey, okay, you're going to go on. You're going to have challenges and obstacles to overcome. So it's important for you to expect them as part of your journey towards being a consistently successful trader. And like a box in a ring, you cannot get into the fight without expecting to take a few hits. And trading is very, very similar. But what we like to do is keep the hits small so that we don't get delivered a knockout blow against us. So let's have a little look at a couple of ways that we can actually help ourselves with that. Okay, help we can in our journey and just making sure that we're doing the right things going forward. So what I like to talk about is, instead of just focusing on just being a trader or trading, I like to talk about planning for profit. That's what I like to. I like to think of make you think as profit planners rather than just traders. Okay. And what does that actually mean? Well, what I talk about is don't just open a chart and start looking for a trade. All right. I know that's part of what we do, but hopefully, you've seen over these last few sessions that we start to build up a little process that we'll be able to follow. Okay. And that's what we're looking to achieve. And we're going to talk more about that as over the next few sessions. What we do before we just open our charts. That's what we're going to be focusing on. So what we talk about is actually do your analysis. Now, admittedly, for most of these sessions, we've talked about technical analysis, but I appreciate some traders will use fundamental, some people will use sentiment, some people will use, other geopolitical, other people will use various other types of analysis. But what we're talking about is, do your analysis and start planning profit opportunities, right? Rather than chasing markets, start looking at opportunities for you to plan for profits. That's what we do. That's what we like to try and hear. Think about becoming a profiteer. Don't guess, don't trade, wait. That might sound a bit strange, but what we're talking about is, there's no need to be impulsive. There's no need to be sort of mashing keys there, just chasing the first bar you see moving fast. It is about do your analysis and start planning for profit. That's what I want you to think about. Because ultimately, this is a business. You've got to treat it like that, okay? Because if you want fun and excitement, well, go and get yourself a PlayStation, okay? Go and do that, okay? That's fine. You are professional risk managers. You are professional risk managers. That's who you are, okay? And you're looking to plan for profit, and that's what we like to do as traders, okay? Certainly as professional traders. So as you said, don't focus on trading, okay? Which might sound a bit strange, but trading is the buying, the selling, okay, being engaged in the market. What we want to do is focus your time and energy on planning, okay? Sit and look at those charts, okay? Build a plan. You've heard me talk about it all the way through these sessions, all right? Plan your trade your plan, manage your risk. That's what we've talked about doing time and time and time again, okay? That's what we'll be looking at. If direction is not clear, then let price lead the way, all right? Don't try to just guess or just take a wild stab in the dark. If the direction's not clear, then let price lead the way. If you don't know what's going, you wouldn't fly a plane in zero visibility. You wouldn't go scuba diving in zero visibility. So why trade when you don't really have visibility of what's going on within that market? People think that because I've traded for a long time, that means that every time I look at every chart, I know exactly what's going on in the market. And the truth is I don't. There are days, okay, where I can look at markets and I'm completely in tune with markets and I can understand what's going on well, okay, and those are days to trade. But I even have, and you'll find any professional traders will have times where they will look at markets and just scratch their head and wonder, what on earth is going on here? They won't, because they just don't really get it. Just the market's just doing its own thing. Okay, it might be transitioning into a new phase. It might just be things that are going on that you just don't know. You won't understand for maybe days, weeks, or months down the line. And so when markets are like that, the best thing to do is to leave that market and go and find a market that you do understand, or you can actually analyze, all right? And then that takes a little bit of experience, but a little bit of, as I said, it's about planning for profit. So when we look at, profit planning versus just, trading, punching the buttons, well, what I have is, I've built repeatable tactics. We went through a few of them earlier on in the session when we did sort of focused on the mastering method element. And what we like to do is, how I look to do is, I wait for them. Okay, I plan my trades. I think of it myself as almost like an ambush. That's what I'm looking for. I'm looking to set up an ambush for price. And when price comes into that ambush, it triggers my trade. That's the way I like to think of operating. So that prevents you from getting caught in trading. And what we mean by that is that, that just prevents you from getting caught in those kind of knee-jerk reactions, okay, that we quite often see. We see a market move really fast. You see a big bar building up, and natural reactions to jump on it in an impulsive manner. And that's what we're trying to avoid, ladies and gentlemen. The thing is, by doing this, by actually starting to plan your trade, it starts to develop patience, consistency, and confidence. And let me assure you, traders, okay, is that in your trading journey, you are always going to want to develop patience, consistency, and confidence. Those are three key traits that you're going to want as a trader, okay. And anything you can do to help you build that, okay, to build those muscles, for want of a better word, you're going to want to get involved with. So, one little task you could do is, when you look at a chart now, okay, when you look at a chart, practice visualizing the next 12 candles. We can see where the trade is now. We can see where the market is now, but start to visualize where could the market be in the next 12 candles. And I know I talk about what I used to do when I first started was what I would get down. Primarily when I first started, I used to trade a lot of pound against US dollar. And what I would do in the morning is I would print off the 15-minute chart of pound against dollar, and then I would draw in what I thought the plan was for the day, where I thought, looking at my analysis, where I thought pound dollar would go. And then, of course, at the end of the day, I might take another sort of print and see, how it actually, how the market sort of developed during the day compared to how I thought it would. And strangely enough, the more times I did that, okay, the better I became at it. Okay, the more when I was days when I was completely wrong, I could sit there and learn and understand, and say, learn and try and learn from the situation as I work out what actually happened. Well, why was my analysis so off in that particular case? By doing that exercise, it helped me develop patience, consistency, and confidence in my own trading. And I would heartily recommend you do it yourselves as well. And that's it, because you don't want to be reacting to price. That's when we tend to make impulsive, foolish decisions. That's not the way we want to be. And as I said, it's about an ambush. It's about, think about it as setting a trap. That's what we're looking for. So, of course, when you start moving towards profit planning, well, there are benefits associated with that. Okay, what we're looking at are, when you logically plan your profit opportunities, you stop making stupid trades. Okay, we've all made stupid trades. All right, everybody has done. All right, there's no need to take it as a stick to beat yourself up. But when you start to actually sort of become a profit planner rather than just a trader, well, then the likelihood of you making stupid trades diminishes rapidly. You have more control of your trades, and that you're looking to plan your trade your plan, and manage your risk. That helps you develop consistency in your trading. Once you start to develop consistency, you also become confident, because confidence is key, right? Confidence comes from competence, right? And you get competent by you being consistent in your trading, and then your experience makes you a better trader naturally. So I can't promise that by becoming a profit planner that in the first trade it's going to change your trading career. But I can assure you that by embracing these ideas, okay, well, that will allow you and help you to become a profit planner. Okay, and that's what we want you to do, and to sort of generously enjoy those benefits. Hey, so great quote from Jesse Livermore. Okay, reminiscence of a stock operator. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this: it never was my thinking that made the big money. For me, it was always my sitting, right? And that was him being able to sort of sit and be a profit planner, okay, to actually let the market come to him rather than chasing the market, okay. Anything you chase in life tends to run away from you even faster. It doesn't matter whether it's a market or a sports result or a partner or whatever, money itself, whatever you chase, it always tends to run away from you faster. So actually, be a profit planner, set an ambush, have a plan, let it come to you. So how do we do that? Okay, and this is what we want to crux on is we want to talk about record. This is step 8. It's a great quote by Dr. Alexander Elder. Show me a trader with good records, and I'll show you a good trader. And he is absolutely 100% correct on this. Okay, I've been coaching traders for years, and the ones who have good records tend to be the ones that go on to develop, consistency, confidence, and discipline, okay, within their trading, which tends to lead them to becoming consistently successful. Show me a trader with good records, and I'll show you a good trader. So just take a moment to right here to think about that, ladies and gentlemen. Do you keep good records of your trades? Okay, I know you might think you do, but do you genuinely? That's what we, I want you to just think about as we go through the next few slides. So let's set the scene, all right? Okay, we've set our scene for a session. Let's say we're going to be, we've planned our session. We've conducted our pre-market routine, which is something we're going to look at over the later sessions in terms of, well, what do we have to do to sort of get ready to be in a good space, before we switch the computers on. We have decided to trade. That's because we understand our ideal trading state. That's another thing we'll look at in many weeks to come. And we've developed a trade plan for the session. Maybe you're intraday euro dollar trader, or maybe you're a swing trader on commodities. But what's happened is we've developed our trade plan. Then what actually we've done is we've traded our plan. We've planned our trade, traded our plan. So then what do we do? Okay, at the to come towards the end of that trading session. Well, it's time for records and review. Okay, and today we're going to focus mostly on recording. So what do you need? Okay, well, to record your trades, and I appreciate that there are actually some wonderful tools, sort of tech tools that you can plug in to your into your trading platform that will allow you to download data and keep records. But there's also an element of, by keeping basic records yourself, it forces you to embrace your business, forces you to engage, and forces you to keep on top of your numbers. What we need are at least at least a few simple basic records, like a trader's spreadsheet, a trade journal, to help plot your equity curve, and also a grade card. And we're gonna look at 3 of those here today for the remainder of our session. Well, a trading spreadsheet can be very simple on Excel, all right. You don't need to be a superstar, okay. You don't need to be an absolute superstar in your trading, or rather even in your Excel skills. What you need to be able to do is just to have a simple Excel spreadsheet that makes sure it covers details, things like the date, the day, whether it's maybe a trend following or reversal trade, what kind of strategy or tactics were you using, what was the time scale, what was your outlook for that particular trade, what were the outcomes, and also what were the performance and the execution grades. These are key, and we're going to talk about them throughout this session and the next one. You've also got the grade card we talk about, and I suggest to all traders that you grade your trades, all right? You don't grade them just for performance, but you also grade them for how well you executed your plan. So you can see there the scores there for performance scoring. Well, if you hit your target, you get a score of 5 out of 5 for performance. If you hit your stop, well, you score 1 out of 5 for your performance, all right? And that's okay. But actually, what I really want to see from my traders is that, you have good execution scores, okay? That you're actually, scoring lots of 5s, namely that you followed the trade as dictated in your plan. That's the key thing. And if you are making like impulse trades, okay, or that you entered the setup late, all right, that then actually what you're looking at is you're scoring yourself low on that, because we might not be able to influence the outcome of a trade, okay, but we know there is no excuse for not being able to plan our trade and trade our plan, okay. That's the thing we can all do. We can all get better at execution on our trades, and that's what we're looking for here. And also what we look at is to fill in a trade journal, okay? And I suggest you fill one in for every trade that captures basically all the details. Whereas you've got the Excel spreadsheet that will capture, let's say the numbers, the statistical. This is actually also more about writing down how did the trade play out, all right? And also what were your feelings on the trade? Maybe you felt really, really super confident before the trade triggered off. Maybe you felt nervous, maybe you felt anxious. As the trade went your way, did you feel, euphoric, or as the trade pulled back against you, did you feel nervous? Excuse me. And this is what we talk about. We want to understand your feelings about that trade. Also, what we want to talk about is, what did I learn? What did I learn? That is crucial. It should be something for you to learn every single trade, okay? Even if it is just reinforcing good practice, it's important for us to do that because it's what helps us develop as a trader. Here's another great quote from Tom Basso, okay, New Market Wizards, where he talked about, every time I take a loss, I need to learn something from the experience and view the loss as tuition at the College of Trading. As long as you learn something from a loss, it's not really a loss. I stopped looking at losses as problems and started viewing them as opportunities to elevate myself to the next plateau. And I actually, on my own trade journal, I have that little quote right at the bottom, just to remind me that if I've had a bit of a losing trade that I might not be a little grumpy about or not overly happy, just have to remind. All it is just tuition at the College of Trading. That's it. My job is, to learn what I can from that trade, and if I have learned, well, then actually it's not really a loss. And I would, suggest that, print that screen off, take a screenshot, stick it up on your wall, okay, to remind your traders of, what you should be doing, right? Making sure that, that you view it as, tuition at the College of Trading. You should be making sure that you keep a, good trade journal. You should be keeping a good trade spreadsheet, and also making sure that you grade your trades for performance and execution. So there you go, ladies. There's plenty there to listen to on our first part of Step 8 on record. Okay, plenty of there for you to sort of get your teeth into that you can start to take away and use. In terms of creating things like a trader spreadsheet or a trade journal. Okay, it doesn't need to be perfect. It just starts. Okay, get the data in. And that will be the key thing to helping you develop as a trader. So, we're moving, we've done most of the 4Ms of the money section. Now we're moving into the 4Ms of myself, which is about managing performance, recovering from slumps and improving performance. And as we go on later into 2019, we'll be talking about shorter term trading and some kind of advanced trading tactics. But, hopefully you'll sort of had a little bit of understanding from the session there about, how crucial it is to help, start keeping records of your trades. Because actually what will happen is, as we go into the future sessions from that, we'll see how, getting that data can help us, with our trades going forward and how we help manage myself, right? And that's what becomes significantly more important to us as traders as we grow and develop as traders and as we build our own particular trading business. So as always, ladies and gentlemen, to finish off, if you haven't started doing, remember to manage those 4Ms of trading: markets, method, money, and myself. Just ask you the quick question here and now, are they all in alignment in your own trading business? Is there an area that is, you're overweight in, or is there an area that needs to work on development? That's absolutely fine. Just check in with yourself, okay, and be sure to start doing the work that's necessary to make sure those 4Ms are in alignment, because when they are, that's when we tend to do our best work. So if you have any questions about Admiral Markets or today's webinar, then by all means feel free to get in touch with Admiral Markets. You can call them there on the London number 02077264003. Drop them an email at hello@admiralmarkets.com. As always, this session and all the rest of the webinar series will be on youtube.com/Admiral Markets, and you're also able to find them on Facebook, facebook.com/Admiral Markets Global. So there you go, ladies and gentlemen. I hope you found that useful. I apologise, we had a little bit of a delay starting, just a little bit of tech issues, okay? But hopefully you found that useful. It gives you a little bit of insight into what you can be doing to help build your own trading business and what you need to do to effectively help you become the best possible trader that you can be. So for those of you who are available, as always, we have the real-time daily trading ideas sessions on the Tuesday morning, 10 o'clock London time, or alternatively, I look forward to seeing you again next Monday at 4 o'clock for the next session in the Admiral Markets Mastering the 4Ms of Trading webinar series. Trade well, ladies and gentlemen, and I look forward to speaking to you soon. Thank you, Phil. Phil says it's all starting to sink in. I appreciate that. That's the idea. Session after session, we just build, slowly but surely, we just build and add to our sessions. And, and the more times you hear it, the more it sinks in, the more it becomes your natural way of operating as a trader. Boris says, thank you. Yep, you're very welcome, Boris. Thanks for joining us. Okay, have a great trading week, and I'll look forward to speaking to you all next Monday. Thanks very much, ladies and gentlemen.